Well, hey there, everyone. Happy Monday, June 22nd, 2026. Welcome to Chart This with Dave Keller. I'm your host, Dave Keller. Do not adjust your clocks or your phone or your timepiece, whatever you use to track the time these days. It is 7:30 p.m. Eastern, 4:30 p.m. Pacific. Uh, Life happens sometimes. We learned we've had some hiccups in getting my daughter all ready to go, going to college in the fall up in Canada, in Vancouver. And so we made a run to the border today to secure her student visa. The good news is she's got it now. So that's one more thing checked off the Keller family list. But it did mean we had to do the show a little later than normal. So apologies for that. Thank you so much, those of you bravely tuning in live at a completely different time than I normally do it. I apologize for that. I appreciate your grace and space and flexibility as I yank around the start time of the show to fit some personal needs sometimes. With that in mind, though, lots of great charts to feature for you. Including an S&P that's continuing to be choppy, sloppy, sideways, an energy sector leading the way higher, some growthy sectors having some serious pullback action, and many of the Magnificent Seven looking less and less magnificent to start the week with a pretty rough Monday to kick things off. If you're tuning in live on Facebook, LinkedIn, YouTube, and X, thanks so much for tuning in. You are welcome to ask questions as we go. If you're watching this later on our YouTube channel, thanks so much for checking it out. Please use the comment section of our YouTube channel for any questions. We had a really great a special markets closed for Juneteenth Friday mailbag episode last Friday. Great questions from all of you. I hope you enjoy the answers. And if you missed it, Fridays when we answer a bunch of questions, go back to that episode and hopefully you'll be able to check out some of those great questions your fellow viewers have sent in and hopefully some answers that made you think and fill out your understanding a bit. Let's dig into the market action here on Monday and reviewing the charts. It's kind of a good thing, to be honest with you, sort of driving for a couple hours, so I can't follow the markets. So we're about 3 hours in the car all in, two hours each way to get all of this squared away today. So I didn't have a lot of chance to check the markets during the day. Sometimes that's one of the best things to do, to be honest with you. There's a lesson in there. Not being able to sort of pay attention to every wiggle squiggle in the markets can be really valuable because at the end of the day, you kind of just fire things up and say, okay, what happened? And a couple observations, given the fact that I was able to just sort of check in on the markets after the close and review what happened. First off, pretty impressive open. And I would say the first 30 minutes, kind of nice. And I wrote a note for my premium members right out of the open, just sort of making some observations about that initial move. And it's worth noting that a lot of things kind of opened in a pretty significant, sort of surge higher. But after the first 30 minutes, that was it. The NASDAQ really accelerated lower into around 11 a.m. Eastern. That eventually, sort of dragged down the Dow the S&P, and even the Dow came off a bit. The Dow did finish 1/3% higher. The S&P finishing about 1/3% later, and the NASDAQ composite, the worst performer, down 1.3%. Mid caps doing okay as well, outperforming the S&P today. Small caps were basically flat on the day. As you look down here to like the Dow transports and the utilities all finishing in the green. So the S&P and the NASDAQ, kind of the two major benchmarks, are the ones in the red, and the mega cap S&P, of course, in the red as well. That's the S&P 100. But everything else, mid caps, small caps, and other areas, the Dow, all finishing in the green today. You're going to notice some of the sectors were actually had a pretty good Monday, as we'll see in a moment. The VIX moved higher by almost a full point. So the VIX finished the day right around 17 and a quarter, and it was down around 16.4 going into the weekend or going into the long holiday weekend. So a nice uptick in volatility, still in our low volatility range with the VIX below 20, but that's one of those red flags to watch, right? We're always looking to see if there's kind of an uptick in those volatility readings, because that can be a bit of a concern for sure. All right, let's look at the fixed income markets here. We can see the 10-year Treasury yield just over 4.5% higher. That is the long bond yield right around 4.95. So rates generally drifting higher today as bonds sold off. We can see the TLT down less than 1%, but still down for the day. The dollar continuing to sort of gently trend higher, and that's one of those sort of emerging red flags to watch for. Our interview last week, by the way, with John Kolovis, not quite out, I don't believe, but Look for that one on our YouTube channel here in the next day or so. A really good interview at the end of last week talking about a lot of macro sort of forces. And John's a CFA and a CMT, so he's a well-trained technical analysis with a pretty awesome experience around Wall Street and also at buy side firms where I was enjoyed being a colleague of his for a number of years, but also has a really good sense of the macro environment and the fundamental conditions within which these charts are sort of evolving. So a lot of good discussions about broader market implications, about interest rates, about the dollar, et cetera, et cetera. So make sure you tune in on that one. But we talked about the interest rate environment. We talked about the Fed with this new sort of hawkish feel to the Fed after Kevin Warsh's first meeting last week. And so far, rates are generally drifting higher now. All right, looking at the commodity space, gold and silver back in the green today, which is great because had a pretty rough end of the week last week. And gold, of course, remains below its 200-day moving average, but nice bounce higher today, getting closer to $4,200 an ounce. Chart of the GLD and the IAU for me are sort of non-starters until and unless we can get back above the 200-day. That's where I think it could make a ton of sense. But for now, we just have to patiently wait. Energy prices, chopping around quite a bit today, but generally drifting lower. News flow over the weekend was pretty negative, or I guess pretty challenged about conditions in the Middle East and speculating or sort of tracking potential re-escalation. News today has been a little more constructive with some healthy progress apparently in peace talks. And so for now, crude oil, Brent crude, both drifting higher. Energy noticeably very much diverging and up at the top of the leaderboard today, as we'll review in a minute. Soft commodities, by the way, soybean, corn, and wheat, which we've tracked closely at times here on the show, all in the red today. Cryptocurrency is not too bad. Actually had a decent weekend. Bitcoin currently trading just around $64,000. Ether prices right around $17.27. Those are both up from Sunday's session. Trying to sort of continue higher after that double bottom on Bitcoin, but still sort of holding in and waiting to see that. Looking at the 11 S&P sectors, energy at the top of the leaderboard, and that's not been a very frequent spot for energy. The XLE up about 1.25%. Real estate, number 2, up 1.25% as well. Healthcare, the XLV, up almost 1%. Those are your top 3 performers. Note 3 sectors were in the red today, especially communication services, which significantly underperformed, down 2.1%. Consumer discretionary, the XLY, down 1.7%. Chart of Amazon, having a bit of a failure pattern here, as we'll review in a moment. And consumer staples also down the day. So on a sector basis, more sectors up than down, but it wasn't kind of the traditional growthy leadership at the top of the leaderboard. It was energy, which is a bit of a head scratcher given the fact that crude oil prices were all down today, but also real estate and healthcare. Real estate, a fairly defensive sector. Healthcare, generally bucketed with defensive sectors, but it's sort of the biotech trade kind of doing especially well today, as we'll see in a moment. Looking at the stock breadth, generally a little more negative than positive. It depends on where you're looking. At the New York Stock Exchange level, sort of a broad equity universe, 57% decliners to 41% advancers. So that's almost kind of bearish breadth. It's really close. Obviously a fairly negative day. But then you look at the S&P 500, 54% up to 46% down. So breadth kind of depends on what slice of the market you're considering. But the broadest universe that we consider, the New York Stock Exchange, definitely more negative today. So in the large cap space, breadth was a little better, a little more negative in the small cap, in the broader space. Looking at the 9 Morningstar style boxes, we're noting large cap growth, absolutely the worst performer here. You've got charts like Amazon, you've got charts like Palantir. Really looking questionable. A lot of stocks that have not been looking good, continuing to not look good in that space, which is the challenge. Some of the technology names that you would expect to continue to go up and to the right indeed did continue up in the right in space like semiconductors, but not everything doing well in that particular slice. Best performer was actually mid-cap growth. Number 2 was mid-cap core. All right, looking at the Magnificent Seven and Friends, I'm immediately drawn to the big red bar and the big double-digit number for SpaceX. SpaceX looking less and less like a great tactical play after that initial surge out of the IPO last week. We've rolled over pretty good. And we've talked a number of times to, the wisdom, I think, in disconnecting the theme, disconnecting the narrative from, is this stock, right? Is AI transformative? 100% yes. Is colonizing Mars something that I think is in the future of humanity? I think it's safe to say yes. I think that's a reasonable expectation for what this, society of human beings may do at some point. But does that mean SpaceX is a good stock to own today? Not necessarily. And too many people, I think, get caught up in the narrative and the long-term promise versus the value of owning the shares in the company today. And I would say what we saw today with the news flow about a bond issuance by SpaceX, a significant bond issuance, fact that they're going planning to spend over $1 trillion, $1 trillion with the TRI between now and the end of the decade, just on AI infrastructure alone, tells you the amount of money that is being spent. Now, granted, there's some revenues there, but that's also a lot of money going out the door and a lot of borrowing to fuel some expansive, attempts at the AI whole AI infrastructure thing. So, I mean, I think the challenge right now is it certainly reminds me too much, and I don't want to say this too much because it seems like something an old guy would have said in 2000, and I would have laughed them off at that point. But here I am saying this reminds me a lot about the late 90s, early 2000s, and the internet. And everyone was absolutely right that said the internet is going to absolutely transform everything about everything. They were 100% correct. But were these technology companies in 2000, was Cisco a great buy in March of 2000? The answer was no, it was not. It was an absolute disaster. And so again, there's just too many similarities with the whole AI thing. And people seem to connect so directly. AI is amazing. It's going to change the way we do a lot of things. I think that's true. But does that mean I want to own Alphabet today because of the AI thing? I see a ton of expenses and I see benefits way down the road. But I feel like there's going to be some periods where those are not necessarily great charts. I'll be happily proven wrong, and I'll watch those charts go up just with you. But for now, they're feeling like what I feel like the narrative probably is going to do, which is we get way too ahead of ourselves, and all of a sudden there's just way too much expense and not enough immediate gratification of great revenues and great bottom line earnings. For what it's worth, that was a long-winded soapbox. Maybe I've gotten all cerebral after driving in the car for a bunch of hours, but SpaceX down another 16% today. Alphabet down 5%. Amazon down almost 5%. Broadcom down 4.5%. Microsoft, Meta down 2 to 3+%. So we're serious. I mean, the Magnificent Seven as a bucket of stocks really underperforming, and so the juice has not been here. The juice has been in semiconductors as opposed to this particular basket of stocks. But I think this is, obviously an important group to watch because of the weight in the major indexes for sure. All right, that's it for the front page. Let's continue on here and look at the heat map. We're going out live to Facebook, LinkedIn, YouTube, and X. Looks like we're streaming fine, and I'm seeing some comments on those platforms. So you are welcome to ask questions all along the way if you're tuning live, and welcome. Thanks, and again, thank you for boldly and bravely hopping in at a random time when I could get back home and get a decent internet connection to do the show. If you're watching the show later on our YouTube, this probably feels like a normal day. And thanks for watching. Thanks for telling your friends about it. Thanks for asking some questions, which I hope will feature in our mailbag episode at the end of the week. Here's what happened on the heat map today. And I'm immediately drawn to the bright red in some of the biggest boxes. In the bottom left, Alphabet down 5% today, depending on which of the share classes that you're using. But Alphabet as a stock, not a particularly good one. We grabbed that to dig into a little bit deeper. Broadcom is another one we'll look at in a little bit. Just a nice kind of counter trend rally last week, but today sort of given back last week's gains. Microsoft continue to not really feel a lot of love, and Palantir, looking less and less like the type of chart we want to talk about too much, right? Generally, if you follow the vibe of this show, we often try to cover like the big names that I feel like everyone needs to track, Amazon type of stocks. We try to highlight names that are starting to rotate higher, but names that are just kind of inconsistent downtrends. Like I feel like we know that, so I don't have to keep revisiting it until it starts to look better. And Palantir is starting to go in that bucket of clear downtrends that we just wait until this thing starts to improve. And Palantir, again, for all the promise of what this company, how it's going to transform the way we do everything, the chart doesn't look good. And I think this is one of those times when it really pays to pay close attention to the chart and disconnect the narrative of these companies between what the chart is telling us. Palantir's making a new 52-week low today, right? And that's after consolidating and potentially resolving to the downside. But look at that chart in a little more detail here in a moment. Just to get the red colors out of the way, consumer discretionary, really not a great day. Amazon's the biggest name, made a new swing low today. Last week's kind of chopping around. Today, it appears to be reaccelerating to the downside, and a number of other names that have been looking very, very good. Names like Marriott has been a top name we've been following, kind of pulling back going into the weekend, continue to rotate higher. A lot of these names that are down the most have not been particularly strong charts. And hey, names like Ross Stores, ROST, are still good charts. Charts like TPR, I mean, improving, and compared to the rest of consumer discretionary, those are the types of charts like Ross Stores, like TPR, Tapestry. Those are the types of charts I would personally be looking for. All right, so that's the red. And I'm also would just bucket in that in terms of things that did not do well that you want to be aware of. The rest of communication services like Netflix and Fox, not a great day. A lot of consumer staples names like PM stands out, kind of testing a swing low. Keep an eye on that one if that's one that you're actively playing. So what worked? Energy working really well today, right? And stocks like Valero made a new swing high, pulled back. They're kind of at the lower end of the range, getting a bit of a bounce today, even though crude oil prices were down quite a bit. So this is one of those times when maybe separate the commodity with the stock and note if the stocks are getting a bit of a bounce higher. That might be something you want to be aware of. Some of the pipeline companies like KMI, WMB, having a decent bounce. I would say, some of these charts still look a little questionable to be certain. Like an Apache made a new 3-month low last week, and today was just a bounce off of those lows. But let's keep an eye there. Certainly, if there would be an issue and sort of a more of a negative turn in headlines from the Middle East, would not be surprised if energy stocks start to do much better very quickly. Also noting strength in financials, right? Bank of America made a new all-time high today. That's after retesting previous all-time highs. State Street, STT, continuing its uptrend, making a new all-time high today. So, I would say the financial sector in terms of sectors really emerging in a new position of strength in Q2. Financials, healthcare are probably the two at the top of the list for me, and probably industrials would be third there. Then finally, I would say in terms of sectors doing well, REITs continue to please not ignore that sector, because there's some great higher yielding names with strong uptrends in that sector. But I would also note, of course, in technology, we got to go back to the fact that even though Microsoft, Broadcom, Nvidia, Apple, Oracle, and Palantir were all down, and in some cases down quite a bit today, there were a lot of things that were up significantly. And I would say the volatility in the technology sector is considered extreme at this point, to the upside and the downside, and particularly the semiconductor names like LRCX closing above $400 a share for the first time today. KLAC finally powering above 250. SanDisk getting well above 2,000 today. These are the names continuing to accelerate, hitting big round numbers and continue to go higher. Are those overextended? I would say hard to describe them as anything but. However, the trends are still positive. So this is where those trailing stops we talked about in our last webcast, this is the kind of time when you want to have those queued up and ready to go. All right, we'll continue on here in a moment. Before we do so, I want to thank one of our partners, Koyfin. Quick shout out to my friends at Koyfin. They've been longtime supporters of Market Misbehavior. For a financial advisor, you're still juggling spreadsheets, PDFs, a bunch of different platforms to prep for client meetings. You should check out Koyfin. It brings together portfolio analysis, model portfolios, client reporting, also market dashboards, advanced charting, all in one platform. In the interface, I would argue, very intuitive. It creates clean visuals that are easy to manage, and I think could enrich your conversations with clients. You can sync up custodian data, upload brokerage statements, create polished client portfolios, client proposals, and monitor allocations and risk exposures without wasting a ton of manual work. I think it's a great workflow tool for advisors in particular. For my advisor friends, if you use my link, marketmisbehavior.com/Koyfin, you can get 20% off a new account. I'd encourage you to check it out. Again, for advisors, go to marketmisbehavior.com/Koyfin. Thanks to my friends at Koyfin for being longtime supporters of Market Misbehavior. Shall we look at some charts together to finish off the episode here on Monday, June 22nd? The S&P continuing to sort of chop around in this no man's land. We're well below the previous all-time high, around 7,600 and change. We are well above the 50-day moving average in our bright blue line in the sand, right around 73.40. So for now, I would argue we wait and see, right? The market is telling you, the chart is telling you the market's kind of fairly valued at S&P 7450 to 7500. We've just kind of been trading around that range. So at some point we break out of this range, and I would say this is kind of the new neutral. And I think breaking above 7600 is what I would need to see to say, all right, buyers are now reasserting control. This is more of a bullish follow through with good leadership, which is something else I'd want to follow, and also momentum and volume. Let's see if those trends improve. On the other hand, a break below 73.40 would get below our line in the sand, also the 50-day moving average. For now, the momentum is pretty neutral with an RSI around 53. This is a market kind of treading water and waiting for that next big catalyst. We do have some decent earnings this week, right? We've got economic data coming up. I think the PCE data is on Thursday. That's more recently been the Fed's preferred measure of inflation, sort of core PCE. So we'll see what the latest inflation data will tell us. Also, of course, the Micron's earnings coming up later this week as well. In terms of breadth indicators, I mean, the breadth has generally held up pretty well, and I think that's an important point. A number of my recent guests on the Market Misbehavior podcast have stressed, and some of the live streams we've done recently. I would also note there are more and more stocks making new 52-week lows in the last couple sessions. So going back to last Wednesday and then Thursday and now today on Monday, of course, Friday markets were closed. Back here on Monday, we're just over 6% of the S&P making new 52-week lows today. Not a swing low, but like 52-week lows. So there's a lot of charts. While there are plenty of charts like Sandus just like ripping higher, there's a bunch of things that really don't look good and haven't looked good for a while. It's a very bifurcated market right about now. And I think the new high, new low data supports that. Honestly, the fact that we've had so many Hindenburg Omen signals firing in the last couple weeks tells you a lot, because that's built on a bunch of new highs and new lows on the same day. And so a day like today could also be another one of those signals for sure. 10-year yield popping up a little bit, and I think this is an emerging, sort of theme to watch for. Yields have generally been coming in over the last month, right? From mid-May to mid-June, the 10-year Treasury yield was almost to 4.7%. It's now down, almost to 4.4%, but today we're actually bouncing up a bit, just over 4.5%. The yield curve has generally been flattening, particularly this bottom series, which is tracking the 10-year versus the 2-year. Again, my podcast interview with John Kolovis of Macro Risk Advisors, we talk about the shape of the yield curve, talk about interest rates and the dollar. So I'd encourage you to check that out as soon as it's ready, hopefully very soon for you. Crude oil prices still kind of actively testing the 200-day moving average. On Thursday, we talked about that test of the 200-day. Today, we actually traded briefly below the 200-day before closing just back above there. The chart of crude oil is oversold and hit the oversold condition last week. That's the first time it's been oversold in a couple years. So the fact that we've had such a drawdown, the fact that we're testing the 200-day moving average screams to me maybe a contrarian bounce to the upside. That's what I'm sort of looking for here. I would say in terms of follow through, getting back above $80 a barrel, I think could confirm a new sort of uptrend phase in crude oil. But for now, will we hold the 200-day? We're oversold right now, so let's see if we get a bounce higher. For now, continue to be in a downtrend. Speaking of continuing to be in a downtrend, I see there Alphabet trying to get back above the 50-day moving average. We talked last week about charts like this, kind of getting a bid and bouncing up off of a swing low. But today we're getting right back down to 350. We actually closed within the range of last week's low. And so this looks like a failed breakout above the 50-day, now starting to rotate lower a little bit. The RSI is right at 40, which is kind of our cutoff for bullish momentum. So we get much lower if the RSI pushing below 40. All of a sudden, it looks like a pretty negative chart. All right, candle quiz of the day. I know these are popular with some of our viewers, particularly some of you watching live. This is hopefully a layup one. We're going to start easy. We're going to ease into this week. This is a classic pattern. We refer to it often. If you know bar charts, it's called a bearish outside day. Common reversal pattern, particularly when you see the market trending higher and you see this 2-candle pattern, it suggests short-term negative sentiment, right? So we're going higher. All of a sudden, we have this bearish flip. And all of a sudden, the range of day 2 engulfs the range of day 1, correct? At Rustin Rogers 5807, bearish engulfing pattern, 100% right. Bullish belt hold. No, good question. Bullish belt hold, a little different. Bullish belt hold would actually, bullish belt hold is an interesting way that I've never actually referred to this one, but I call it like a bullish piercing line. It would be like a downtrend, lower open, higher close. But yeah, this is a bearish pattern, right? 2-bar bearish pattern because we have an up day, then a down day. And the key is there's a wider range on day 2. So higher open, lower close. So the fact that it happened right at the 50-day moving average tells me, on the chart of Broadcom. And going into last weekend, it was like, whoa, okay, we're finally getting a bounce higher. And remember, NVIDIA and Broadcom, like the 2 big semiconductor names, have been lagging behind the rest of the semiconductor space. The SMH looking a lot stronger. A lot of other names like Lam Research and KLAC and others in these nice uptrend phases. These have gapped lower in June, but today kind of failing to get above that 50-day moving average. Amazon actively testing the 200-day moving average. We set 2 price alerts last week. One was if Amazon got above 250. The other one was if Amazon got below 230. I was wondering if that was actually going to trigger today. It did not. But we're actively watching. I mean, it literally closed at the 200-day moving average. So I would say Amazon at this point looks quite vulnerable. If we follow through below 230, this all of a sudden looks like a chart just absolutely failing to find buyers. That's a heavy selling pressure and plenty of distribution. The momentum has been fairly negative here. Palantir, again, looking less and less like the type of chart I even want to feature on the show. If you look at what's happened on Palantir in the last 6 months, we went below the 200-day moving average, and look at a number of these attempts to get above the 200-day, all that failed. Most recently, we have this, this is an awesome candle pattern, a 3-bar pattern called the evening star pattern, right? An up day, the little open and close right around there, and then a gap lower and the down move, 1, 2, 3. That's called an evening star pattern happening right at the 200-day for swing traders. Classic short-term reversal pattern suggests we head back to retest the lows, which we now have. We had these lows right around 125 in February, again in April, and now it looks like we're failing to hold that. The RSI failing to hold 40. So, look for some sort of bounce tomorrow, but otherwise, this all of a sudden looks like a pretty negative downtrend. And I see some comments talking about some of these head fakes. 100% agree, right? I mean, there's last week sort of felt like this nice surge, and for the bulls sort of felt like, new buyers coming in. This might be a good surge. Today, sort of, putting a big X on that idea. So if the Mag 7 names are struggling, if some of the big semiconductor names are not doing well, what is doing well? 2 sectors to talk about, I would say healthcare and financials. And to be clear, these are just a couple that I've grabbed that are pretty interesting charts. There are good charts in a lot of different sectors. So keep your options open for sure. But here are a couple that stand out to me. First, ABBV, making a new swing high today. I often scan for stocks making new 3-month highs. Today, pushed above 230, kind of closed right at that point. Look at the momentum that's generally been improving. The relative strength is improving. We're back above the 200-day moving average, which I think is a pretty encouraging development. I don't know what I'm doing with these charts here, so I'm kind of fat fingering all over my laptop. There we go. Breaking to a new 3-month high. There's still some overhead resistance on this chart, so I would say not like a perfect all clear for me. Getting above that 235 level would be an important sort of validation of this breakout, but really encouraging with the pullback to the 200-day. Today, buyers kind of popping up here. Vertex, same group. We're in the biotech group within healthcare, breaking above 460 today. That's clearing the swing high from May. Feels like a nice accumulation phase off of the lows. The RSI just pushing above 60. That's one of those kind of breakouts on stronger momentum that I like to see. And look at the relative strength starting to improve as well. In the financial sector, we've covered names like Morgan Stanley and Goldman Sachs, which have been already making new highs, but I'm finding more just starting to break out. Here's BAC. I'll tell you what the chart of BAC looks like to me. This is a different one. This is one we don't talk about too often. Ready for this one? An inverted head and shoulders continuation pattern. That is a mouthful to describe what I'm about to show you right here. An inverted head and shoulders is usually a bottoming pattern. It's usually something you see in a downtrend, and you see a lower low, and then a higher low, and that's sort of this nice reversal. This is sort of a different one. This is an inverted head and shoulders continuation pattern, which is less common, but it does happen, where you have a big rally, and then you have a pullback, you have a much lower pullback, and then sort of a shorter pullback. Look at a gem. I mean, boy, it's not as symmetrical as I would ideally like, but I think still good enough. You've got the head here, a left shoulder, kind of a complex right shoulder of sorts. But look at the very clearly defined neckline with the swing lows in February, and it's really the swing highs in February and April connecting. Over the last couple of weeks, we've now broken back above that neckline. That's a continuation pattern. So one of the common ways you measure this, is to do this. Say, okay, great. What I do now is take the height of this pattern, and then you kind of, duplicate that. And that's sort of, once you've broken the neck, you take the height of the pattern and you project that as an upside objective. So that gives you an objective, like mid 60s, low mid 60s, given on, the height of that pattern. It's sort of the minimal measurement for Bank of America, given that uncommon but very, I think, clear inverted head and shoulders continuation pattern. There's your pattern education for the day. All right, I saw some random questions in here, random comments, which we'll take before we wrap in a kind of a belated evening. Yeah, I saw Alan Greenspan had passed away, and he was the originator of the term irrational exuberance. I mean, talk about contributing, so much obviously to the financial industry. Whether you thought he was a genius or an absolute, disaster of a Fed chair, he was pivotal. And when I was learning about the whole investing thing, Alan Greenspan was sort of central to that in the mid 2000s. And again, that quote, irrational exuberance, has been one of the great case studies on in market behavior, really market misbehavior, pun intended, and investor psychology. I learned a ton from, sort of learning about his perspective at that time, how others referred to his quotes, and really captured. That phrase just so brilliantly captured the investor sentiment of that era. And you kind of felt during that time, that's the kind of thing we would refer back to years and years later. And here we are in 2026 celebrating his contributions. So rest in peace, former Chairman Greenspan. Point and figure will also give a price target. Absolutely, right? So there's a number of different techniques that we have in the technical toolkit to develop upside targets when you have a breakout like this. It depends on the pattern, but particularly something that's had a run and then a bit of a consolidation before the breakout. Two things that come to mind for me. The one would be pattern recognition and using the height of the pattern to project a breakout. Again, I keep talking about my interview with John Kolovis. We did that, I think it was on Thursday. So it was right before the long holiday weekend. So it's still with my editor, but hopefully we'll get out to you very, very soon. But we talked about his way of doing price objectives, because he referred to a number of them on different charts. But one of the classic ways to do is take the height of whatever pattern we're looking at and projecting it higher. If you have a basing pattern, like a sideways kind of rectangular shape, taking the height of that pattern and projecting it from the breakout is a pretty, kind of tried and true approach. There's also methods that are built on that projection, right? So point and figure charts will take what's called a vertical count or a horizontal count and project uptrends. If that's something you want to learn about on stock charts, there's actually a really cool free version of a free part of the site called Chart School. Go in the upper left and search for point and figure objectives, because they have the vertical counts built into the platform actually. And then also things like Elliott Wave and others, which are meant to project price objectives based on the patterns that have emerged so far. As with many things that I'm showing on the show, I'm kind of giving you a taste. I'm sprinkling in some education, which I hope you find helpful. But as always, there's always more you can learn about it. So feel free to ask questions about where you can learn more about particularly tools and key tools and techniques, and I'm happy to point you in the right direction. That'll do it for today. Again, apologies for the late kickoff. Thanks those of you that tuned in late. And again, it's an impressive group. Given the fact that we've kicked off much later than normal. I appreciate you guys being ready for the show when I'm able to do it. Sorry for that, but I had to do some personal stuff. We should be back to a normal show time for the rest of the week. In the meantime, have an awesome Monday evening. And remember, it's always a good time to own good charts. Take care, folks.